Welcome to this quick tutorial slash week overview video. Now, my task here is simple. I am going to explain to you why we are actually projecting a couple of 100 pips move for GBPUSD and Nasdaq, and I also try to do a quick end of week review from just the previous week. My hopes in doing videos like this is that you will pick my brain and increase your confidence and obviously become a better trader. Hello, I'm Jay Oko and you are welcome to my YouTube channel. Now, for those of you who have been following for a while, you would agree with me that we normally like to analyze from the DXY. DXY is the dollar's index because of the importance the dollar has in the market. Now, you can currently see my weekly view of the dollar, and we are obviously pointing north, right? We're obviously pointing north. I have highlighted this area as a very important level, and that is what the ICC calls the fair value gap. Now, price is obviously looking north towards that fair value gap, and what can you see just by the side of the fair value gap is a liquidity. And if you have been following for a while, you will know we normally trade from liquidity to liquidity. That high right there, we want to see price rate through it and go to the fair value gap. When it gets there, then probably we'll have the downward move. Now, the reactions we had in the couple of days past prior to this week review is because of the order block right there. You can see that order block that was marked out with a rectangle box. You see price went right to it and rejected. Now it is rallying back to the objection. So these are very important levels we have marked out for our chart, and we understand that if the XY is bullish, like as the case is, if the XY is bullish, which we are expecting to at least get to that fair value gap, then it is a no-brainer that our GU and EU will be bearish. So this is why we're expecting some bearishness for GBPUSD and Nasdaq, as the case may be, for the next couple of days slash week. Now, please note that this movement to the upside can just happen within 2-3 days, or it can happen the entire week, and can also happen for several weeks. All right, this is the weekly chart. We do not control how soon price will get to a destination. Giving. So let's quickly move to the lower time frame, say the 4-hour time frame, and further strengthen the reason we are bullish on this guy to that level we have marked out. So still on the 4-hour time frame and DXY, you can clearly see what price came down to do. Price rallied from this boxed area, which is our order block, bearish order block, and played all the way down to take out this liquidity right there. And notice after the liquidity got taken out, which in our videos we have explained that to be an inducement liquidity. Notice after the liquidity gets taken out, what did we see price do? There was an expansion. There was a move to the upside. So price rallied to take that out, and look at that reaction. So we're expecting some little bit of movement, and then to that area we have marked out from the weekly time frame. Now, having analyzed DXY for the next couple of days, by the way, this is October 14th 2023, so I don't know when you're viewing this video. You might want to check on that date and see how this thing plays out nicely, right? By the way, all of our videos are simply for educational purposes. No pattern or replication is intended to give you signal. Please, I'm not licensed to give you a signal to trade. You have to do your own research, your own financial research before you take in any trade. Great. So let's continue. Now this is GBPUSD. I actually did analysis in another of my charts. I don't want to mess that up. I would most likely do a end of the week discussion with you all. So let's see how that goes. Try to get a general overview of the market, and of course we have analyzed that we are bearish on this guy for the next couple of days or maybe weeks. So I'll try to do a little bit of quick recap of how the previous week went, so you can probably see why we are doing what we're doing. First of all, if you have been to the channel for any length of time, we have talked about various forms of liquidity. And one of the level of liquidity we discussed in our YouTube channel. By the way, if you have not subscribed to our channel, please do so you'll be the first to be notified when we do upload new videos. But we have a comprehensive video in this channel, which I will leave the description or the link anywhere in this video, where we'll talk about the various kinds of market liquidity that we have. And one of them I like the most is the trend line liquidity. And I am trying to paint it right here so you see exactly how that looks like. Price moved like it's in a trend line, and then it will, when price moves in a trend line notion, just like what you can see right there. That's not a very accurate drawing anyway. I'm just trying to beat my time limit. You see, what will usually happen is that price will tend to take out the beginning of that trend line. Above what starts the move of the trend line is liquidity is resting above or below trend line. So this is the ideology. In a downtrend, you have price do something like this, all right, and then like a trend line. The very beginning of that move right there, that started a trend line, price will, if price wants to remain bearish, it will most likely go up there, spike it, and then continue being bearish. So what does this upward movement? It was meant to take out all of the liquidities of guys that were selling or trailing the trend line. Do you get that? So also, if you are doing, if price is bullish, you have this trend line, small movements, and then price will tend to come all the way down to spike the low of that trend line. Price has to want to remain bullish for this to play out. If price is changing trend to become bearish, then this would actually be a break of structure and a return or a move to the downside, change of direction. Do you understand that? So essentially, and I like it a lot when I see it play out in chart. So you can see GBPUSD went all the way to the upside clearly to take out the beginning of that trend line high, and you can see the spike right there. Sorry about the horizontal lines. I just want to share other things as we break GBPUSD for the past week. So it went all the way there, spiked it, rejected off, and it has been falling just as I drew earlier. All right, were we expecting that? Yes, although I did not make a video on that, but I just showed you the logic behind that. Your trade should make logical sense. It should make logical sense. All right, and because we have seen DXY or dollar to be bullish to a particular level or extent, you can actually expect GBPUSD to be bearish all the way to that downside, and even maybe even below, but that area should be cool. Okay, so I am ready, as it were, for the market, and I'm uploading this wherever you are viewing to probably prep you for the market. Now let's quickly look at what the previous week looked like quickly, and then we'll look at Nasdaq and we'll wrap it up. Again, if you are getting some value for this video, please do well to give the video a like. It helps the algorithm so other traders can come also learn something, a thing or two about. Now I took my time to draw horizontal lines in this trading view from between Monday the past week to Friday, and let's try to see what happened in the market. Now there's a pattern that played out here beautifully. This doesn't happen every week, but if it happens, it is pure gold, and that is what we call, ICT calls this the midweek reversal. All right, so if you want to be bearish, price goes up on Monday, goes up on Tuesday, then by Wednesday it reverses Thursday, Friday. All right, and that's exactly the script that was played in this past week. So on Monday, let me clear this all up. So what we see right there, on Monday, Tuesday, Wednesday, the high of the week was formed and then pulled back and then reversed on Thursday, and then Friday it continued. Beautiful, beautiful script. Sometimes it can be on Tuesday, you might have the high of the week formed if you are bearish. If you are bullish, then we're talking about the low of the week formed on Tuesday or Wednesday. That's just by the wayside. So let's zoom right a bit in and see what basically played that. Now, one of the things you would see in, and this, I am showing this because of the importance, not just because it happened this past week. And what am I referring to? I'm referring to when the market opens with a gap. When the market opens with a gap, you can clearly see the market from on Friday into Monday, Sunday night, and Monday, it opened with a gap. Gaps are like fair value gap, all right? But this one is like more of a volume imbalance. Now, the thing to take note of that is fair value gaps, volume imbalances like this one, All right, they all act like magnets to price. They pull price to themselves. So when you see them above or below the chart, be rest assured that they are going to attract price to themselves. So I took this buy actually on the day, and I shared that with our signal room guys, and then took the buy US session on Monday. I targeted profit around that area for that, but that's not why I'm here. So let's continue what basically transpired. All right, so we had that movement on Monday. Now the reason I'm also doing this is to also show you how you can use the patterns and the formulas we have taught in this channel to trade the market very, very simply. All right, now if you had not known that price was going to reverse from Wednesday high, how would you have been able to, maybe you could have missed this drop but get something from Friday, because we did get something on Friday. All right, so let's continue very quickly. We saw price did all of this movement on Monday. The upside primarily was to fill the gap, and once it filled it, notes that high of Friday, right? And then we had price eventually take out that high. And what did we see price do? Liquidity was taken out here. It retraced back into the C couple of other blocks right there. I will not go into smaller time frame like 15 and 5 minutes, just because I don't want this video to be so long. All right, but please follow what I am trying to share. Now, as at Wednesday, I was still expecting a buy. I missed on this trade. I was expecting a buy at this level. That's why that line was there, because what I was expecting is this second pattern we have taught or learned here in this channel. The second movement, we expect this leg to fail, so I expected price to come take this out and expand. So we had the first push, it created a low, I extended it in time, I expected this to come pick it out and move, right? But that obviously did not happen, and something else happened. Whenever you're trading and you see price get to your projected or anticipated TP level, that trade is as good as done. So I expected this area to be my TP level, as at when this area was my entry or POI. I expected this to come there and then move, right? But notice price did not come down first. It did not decline to my entry level. It just went straight to the TP, and this already invalidated my entry. So I was waiting for a reversal. Now, because I wanted confirmation entry, if I was very aggressive, I would have been selling from that very high right there. If I was very aggressive, that high would have been my sell point, right? But I wasn't very aggressive. I wanted to see a confirmation for price. All right, now I didn't participate in the drops. I will not come here and tell you what I did not participate in. I missed out on that, but no problem. Now, something beautiful happened on Friday, which is actually what you want to learn. Now, something again about the market: if you have price doing or breaking a structure with a very strong move, so this is an example of price breaking structure with a powerful move to the upside, or price breaking structure powerfully to the downside. Now, your POI, where you want to buy or sell from, will not be anything inside the range, like your order block or fair value gap, no matter how big and obvious they are inside the range. What that means is, let me give you a very concise explanation very quickly. So you have price broke structure high powerfully to the upside, right? And then you have order block and fair value gap inside. By the way, if you don't know what those means, we have a full video in our channel that explains all of those. Now, you have all of these. Don't expect price to pull back all the way down here before it continues buying or selling, as the case may be, buying, because the powerful move to the upside was already a damaging move. So what will happen is that the order block that failed to do its function will now be converted to a breaker or mitigation block. So what that means is that initially, when price is going up this way, all right, it came down and went up. In this example, there was an order block right there that could have, ideally, price came down, should have reacted off price and sent price even lower. Does that make any sense to you? Let me go again. So when price comes down, price wants to change direction, but you didn't know it wants to change direction. All right, now there's an order block right here that should have sent price lower, But because there was a news, the damage has been done. Okay, they've mitigated all the need to mitigate at the downside. Price now broke up extensively to the upside without respecting this order block. So what do? Your stop loss might have been hit quite all right. Do not expect price to come back inside the range. Why? Because the damage has been done. So what they will do is that they will return back to that area of your failed order block, come back to the area and go higher. So that's what you now call your breaker block or mitigation. And this happens every time in a chart. Especially, the only thing to look out for is the velocity at which price breaks market structure. If price breaks market structure with a very powerful velocity, then do not expect price to pull all the way to the range. It will just react off the order block, or which you have now called your breaker block. Hope that is clear and simple. Now you can see a boxed line I drew right here. Now I'm going to go to the 4 hour and explain why that area was very important to me and why that area is actually my breaker block. In fact, from the 1 hour, let me save our time. From the 1 hour, you can see this last candle, this last dark candle right here. I'm going to extend charts because the same thing I was going to do in the 4 hours, so no need to wasting all of the time. I'm going to put my chart and extend and cover all of the area. Notice, let me zoom right in. When you are marking your breaker block, you are covering all of the levels from the high to the low of the block, right? So that last black candle right there, and by the way, if you're still confused about other blocks or breaker blocks, refer to our exhaustive teachings right on in this channel. If you are getting some value, please do well to like, share. I hate to be the guy that says that, but then people need to know some of the things you're learning for free, and I hope you're getting value. So I just marked that. Let me take out the wider one out because this is from the 4 hour time frame. So let's stick to the 1 hour. So I extended the breaker block ahead of time, expecting price to get there and sell off for Friday. And it was a beautiful sell party on Friday. In fact, in our inner circle, we had a meeting, and this thing, I want to explain this very quickly. Price wanted to sell from that area. That is the area I should sell from, the breaker block. But you see what happened? This line showed you on Friday morning. What did price do? Price opened up that morning, London session, and started. This first black candle right there was to induce traders. You see, if you don't know what you're doing, you'll be used as liquidity point. So it was to induce traders to start going short. So everyone that expected to sell started jumping in right here, and their stop loss was above. What did price do? It returned back, took all the stop loss, went to the breaker block, and boom, the move had begun. So you must know your POI and wait for price to get to your POI. Because of this explanation, I'm going to zoom into say 15 minutes and show you we actually have 2 entries in this particular trade on Friday. If I'm following strict rule, I would have just traded twice on Friday. That would be on Monday based on the gap I showed you earlier, and on Friday based on this other stuff I showed you, and you would be good for the week. So this is the 15 minutes time frame, and again I said I was going to show 2 entries that played that on Friday. The first one, remember this box is our mitigation block from the 1 hour time frame. So expect price to get here. Your stop loss can safely be above that area and you'll be safe if you are selling. Now notice in 15 minutes time frame, what do we have inside the mitigation block? Voila, you can see there is a liquidity right there. There's a liquidity right there. Maybe I will leave a screenshot of my entry along the side of video so you see I actually took this trade, nailed it to the pip, right? Very simple setup. So that was what formed the basic. From the higher time frame, we have our breaker block. Then lower time frame, we have our what's it called, liquidity entry. So I didn't fall for this. I waited price to get there. Meeting price took out the liquidity. I was selling it was there. Stop loss was above the breaker block, and I was holding for full move. Right now, look at what happened, but in smaller version happened again. Look at the way price broke on its way coming down. Sorry about that. Oops. All right, so there is a repetition, or there was a repetition. Take note of this low. See how price broke this low with power, with an aplomb, right? So what do we see there again? A failed order block, which is now called mitigation block. This candle right there, extend it in time. That is your next sell entry. So price broke, returned back to it, and went lower. So you could have actually entered another sell right there, but actually did a counter trade for Euro USD, bought into that range, and then But the more you learn, the more you begin to know how to. I don't encourage counter trading, please. I don't encourage counter trading. And of course, for the new week, depending on what you are watching or where you are watching this from, I can tell you for free. I'm expecting price to clear. Look at this movement. Can you see the liquidity there alongside other block? Because of this little liquidity right here that rested right there. I don't take entries from the for 15 minutes. I mean, I don't give you projection for 15 minutes. I do that from 1 hour, right? So I'm going to do that from the 1 hour time frame. But let me just show you, if you are trading JU for the new week, that is an order block, all right, that should drive price lower. However, price should take out this liquidity first, right? We expect price to take this liquidity to that order block. I want to put my stop loss here because price can actually spike that high and drop. Okay, so but from the 1 hour we'll get something very clear. Now those of you who are trading Nasdaq, say hooray, because I'm going to show something 1802 from Nasdaq played that very beautifully well. Now it's essentially the same thing from what you see from the GBPUSD, right? So we're projecting over 500 pips in grab here for Nasdaq, but then not signal, not telling you what to do. You have to make your own decision from the market. Now this trade, this setup, please, if you are in this channel, you should know this setup. You should know this setup. You should know this setup. Look at this. There was a sweep of liquidity to the left. All of this sweep, all of these things. In a higher time frame, you will see that clearly. And then price rallied down and broke structure right here. All right. Now, after it broke structure, what did it do? It price pulled back and formed some level of high right there. Some level of high right there. That high becomes your liquidity point. And again, notice we can actually extend the lowest low right here, which could have been an order block. You can call it a breaker block. Extend that in time, the very low of that black candle I just extended. Notice how price went back to that very low and gave out 200 pips for free. This was a giveaway. Friday was actually very clean, all right? But how could you have taken this trade? The setup or the idea is simple. You had a sweep and then a break. Oh, that was wrong. What is the setup? You can clearly see right there. Price swept something, broke structure, came back, formed a little leg, came down. Notice this second coming down did not take out that low right there. It didn't take it out. That area becomes your target. Price went back, took it out. You are selling immediately. Your stop loss will be above the breaker block I just showed you right there. And then boom, gave a nice 200 pips. So it's more or less something like this, and that. Okay, simple liquidity and structure entry. And then as at the time of recording, what is my expectation? We have a lot of downsides to go. We have lots of space to cover to the downside. So there's a lot of room to make bucks. All right. Again, this is not signal, me giving you signal. Okay, so what can I see here? A repetition of what we just did or saw is the most likely to happen. And what is it? Look at all of this down close candle. All of them used to be an order block, but now failed to do its job. So it's now your what? Your breaker block. So let's extend price, cover up. So that is my next sell zone. I don't want to know what's happening. That's my next sell zone. So what can you see from there? Before that breaker block, you have a liquidity high right there. Extend it in time. So expect that they're going to take this out, react from the what's it called, from the breaker block, and voila, to the downside. And normally I do 1:3 risk to reward ratio, but I think I'm going to swing this for and keep milking, because that was a taking trade. I'm going to keep milking for as long as possible. So my entry is right there. My stop loss a bit large, but it shouldn't get there. And then I can safely do 1-3, right? Safely do 1-3. Safely do 1-3, and you are good. No matter what you are risking, always risk responsibly. We see, I didn't want to explain this other trade by the side because it's the same thing over and over and over again. You can pause this video probably and look at this trade we took right here. You can pause the video and look at this trade we took right here. Same thing over and over again. Can you see the pattern? Can you see what happened? There was a sweep of liquidity right there. then a liquidity, and the price broke structure there. Expect this leg to go. Price came back, took it out, went that way, right? And then on its way to taking out this structure, it's formed a low. It came up, that low has to fail and then go. Two setup in one sweep move. Simple, simple stuff. Simple stuff. So far, we're going to stop here. And if you have gained value, please do let me know if you have gained value. If you haven't gained value, please also let me know you didn't gain anything, and I will improve. Hopefully, I will improve. Please show me some love, like, share, comment. Let's get this to 2K. Let's get this channel to 2K, and I will see you on the next one. Cheers. Thank you so much for joining me today. Jay Okoli signing out.